Turn your equity into a home buying machine. Step-by-step guide to purchasing your next property. Hey there, future real estate moguls. Welcome back to XTRM Finance, the place where we turn complex money stuff into light bulb moments. Today we're tackling a topic that might just change your life. How to use your equity to buy another home. That's right, we're talking about leveraging your biggest asset, your home, to make more money, build wealth, and maybe even start your real estate empire. Stick with me because by the end of this video, you'll be armed with all the steps to turn your equity into your next dream property. Plus, I'll toss in some humor to keep things interesting because, well, mortgages aren't exactly the life of the party. Let's start with the basics. What is equity? Think of equity as the superhero cape your home wears. It's the part you actually own after paying down your mortgage and watching property values rise. Here's the math. Your home's market value minus what you still owe equals your equity. For example, if your home is worth $400,000 and you owe $250,000, congrats. You have $150,000 in equity. Equity is wealth in disguise. It's silent, patient, and can be turned into cash to buy your next property. But just like a superhero's powers, you have to use it wisely. Step 1 is knowing your why. Are you looking for a vacation home, an investment property to generate rental income? Or maybe you just want a bigger place because your family is growing faster than your savings account. Each goal has its own strategy. For instance, if you're buying a rental property, the goal is cash flow. If it's a vacation home, it's about lifestyle. And if it's a second home, well, you're probably tired of your current neighbors. No judgment here. All right, step 2 is finding out how much equity you actually have. This isn't guesswork, it's math, folks. Here's how. 1. Get a professional appraisal or check recent sales of similar homes in your area for an estimate of your home's value. 2. Pull out your latest mortgage statement to see what you still owe. 3. Subtract what you owe from your home's value, and boom, that's your equity. Now, not all your equity is usable. Banks usually let you borrow up to 80% of your home's value minus what you owe. It's called loan-to-value ratio, or LTV, but let's just call it the can I afford this ratio. Here's where things get spicy. There are 3 main ways to tap into your equity. 1. Cash out refinance. Replace your existing mortgage with a new, larger loan. You pocket the difference as cash. Pro lower interest rates if rates have dropped. Con restarting your mortgage clock. 2. Home equity loan or HEL. A second loan on your home taken as a lump sum. Pro fixed rates, predictable payments. Con 2 monthly payments. 3. Home equity line of credit or HELOC. Like a credit card backed by your home. Borrow what you need when you need it. Pro flexible and only pay interest on what you use. Con variable rates. Hello, uncertainty. Step 4. Get pre-approved for your next mortgage. Why? Because nobody likes house hunting only to find out you can't afford the one with the pool and the spiral staircase. To get pre-approved, you'll need proof of income, tax returns, bank statements, and a credit score that says I pay my bills. This step also helps you understand your budget, so you don't accidentally fall in love with a castle when you can only afford a condo. Now the fun begins, house hunting. Whether it's browsing Zillow at midnight or hiring an agent to do the legwork, the goal is to find a property that fits your needs and budget. Pro tip: don't over-leverage yourself. Just because you can tap into your equity doesn't mean you should max it out. Leave room for emergencies, repairs, and maybe that unexpected pool maintenance. Once you've found your dream property, it's time to close the deal. Your equity will act as a down payment, reducing your loan-to-value ratio on the new home. But don't stop there. Use this as a stepping stone. Whether it's renting out your old property, flipping the new one, or holding for long-term appreciation, keep the momentum going. The goal is to build wealth, not just buy homes for fun. Congratulations! You've just unlocked the blueprint for turning your equity into your next property. Now here's your homework. 1. Drop a comment below. What's your biggest challenge when it comes to real estate investing? 2. Share this video with a friend who's still sleeping on their equity. Seriously, wake them up. 3. Hit that subscribe button and ring the bell for more wealth-building tips. Remember, your equity is like a superhero. It's powerful, but only if you use it wisely. Until next time, stay savvy, stay awesome, and go build that empire. Peace out.